If you want to be a part of the conversation before it happens here on YouTube, click that link in the description to join the free Courtside Financial Discord. What's going on, entrepreneurs, tech enthusiasts, and all-around money-minded individuals? Welcome back to the Courtside Financial Podcast, where we talk about business and technology. Today, we're going to be talking about NIO's upcoming earnings. So this is going to be a super interesting episode. Make sure you hit the like button, make sure you hit the subscribe button, leave a comment down below, and click that notification bell icon, please. That really all does go a long way helping out the channel. And so without further ado, let's get into the video. And before we get started, I know we're talking about stocks and finances and all that juicy stuff, but I just want to make it known that nothing that I'm saying today constitutes financial advice. I'm not a licensed financial advisor. I'm simply sharing this information for educational and entertainment purposes. It's up to you to do your own research and come to your own conclusions. Now, with that out of the way, let's zoom into the electrifying world of NIO. So what's the scoop according to financial gurus over at Deutsche Bank? NIO's gearing up to reveal its Q4 2023 earnings reports, and all eyes are on the gross margin. But hold on to your charging cables because there's a twist. Analysts are predicting a bumpy road ahead, with NIO's management likely steering us through some choppy waters, especially with a potentially weak first quarter delivery forecast. Now, what's on the menu for NIO's financial feast? Well, according to the brilliant minds at Deutsche Bank, it's all about the gross margin. Picture this, NIO delivered a whopping 50,045 vehicles in Q4 2023, exceeding expectations like a boss. But hey, despite that, they're gearing up for a sequential dip, down about 9.72% from the previous quarter. And what about those numbers? Well, our pals at Deutsche Bank are estimating revenue to hit 16.9 billion RMB. But hey, don't be surprised if it's slightly different. After all, this is just their educated guess. And remember NIO Day 2023? Good times. That's where they dropped the mic with the unveiling of their ET9 executive flagship sedan. But let's not forget the not so fun part, layoffs. Yep, NIO trimmed about 10% of its workforce at this time. And this was done strictly to boost efficiency. So let's see how that played out. So fasten up your seatbelts, folks, because here comes the kicker. For Q1 2024, NIO might be hitting the brakes, with deliveries expected to take a nosedive to around 20,000 units. Not a pretty sight, but why is that? Well, according to the crystal ball of Deutsche Bank, NIO is shifting gears with its new models, which means they're clearing out older inventory, so it should be expected, I guess. But hey, it's not all doom and gloom. NIO's still in the race. Now let's talk about the numbers from Zacks investment research. Analysts are predicting NIO to post earnings per share of negative 51 cents, holding steady from the previous year, and they're expecting a slight dip in revenue to 2.29 billion. But don't hit the panic button yet, folks. Remember that these are just educated guesses. And speaking of educated guesses, Zacks has got a little something called the Zacks ring, a nifty model that throws out actionable measures. And guess what? NIO's shredding its stuff with a Zacks rank of 2, which is a buy rating. Not too shabby. So what's the verdict, folks? If the numbers are anything to go by, NIO might be itching for a comeback. But hey, in this world of business, finance, technology, anything can happen. The stock market's like a roller coaster, an unpredictable ride. That's going to be it for this installment of the CF podcast. Looking forward to tuning into the NIO earnings coming up on the 5th. Make sure you hit the like button, make sure you hit the subscribe button, click the notification bell icon, leave a comment down below. Catch you in the next installment. Thanks for watching.